I'm Russ Mould, AJ Bell's Investment Director, and welcome to the latest edition of Fundamentals, where I'm going to be looking at the 9th best-selling fund on the AJ Bell Youinvest platform at the moment, namely Lindsell Train Global Equity. The £1.3 billion fund seeks to provide a combination of capital growth and income over the long term. Manager Michael Lindsell primarily targets stocks listed in developed markets, and he runs a tight ship. The portfolio is just 27 holdings, and the top 10 represent nearly 2/3 of the assets under management. There's no index hugging here, and investors are getting a skilled stock picker on their side in exchange for the 0.77% ongoing charge figure. This first chart shows the latest public geographic weightings, with Japan and UK big overweights relative to the MSCI World Benchmark, and the US a notable underweight. The next graphic shows the latest sector positions. Consumer defensives top the list, while industrials and healthcare have only scanty representation. Miners and oils, they don't feature at all. The yield's currently nothing to crow about at around 0.9%, but the fund's track record of generating capital growth is good. Lindsell's beaten his benchmark in 3 of the last 4 years and is already ahead of the game in 2016. More impressively still, the collective ranks second on a 5-year view in its sector, trailing only Terry Smith's Fundsmith Equity Fund in a field of over 200, and we've looked at that fund in a prior edition of Fundamentals. That leads on to why your fellow investors may be buying Lindsell Train Global Equity right now, and I think there are 3 possible reasons. First, global stock markets, well, they're rallying. Fears of a Chinese slowdown, further increases in US interest rates, and sliding oil prices upset everybody in Q1, and all 3 issues seem to be in abeyance, at least for the moment. That may be tempting buyers to reappear. Second, for all of this macro chat, Lindsell builds the portfolio bottom up, targeting firms with strong competitive positions and pricing power, which probably explains why miners and oils don't get a look in, as these industries are price takers, not price givers. The top 5 holdings as I sit here are consumer staples giants Unilever, Diageo and Heineken, media player Pearson, and also London Stock Exchange. The type of stock selected may help to explain the fund's low 3-year beta of just 0.88, and that may reassure those of you who've got a nervous disposition. And finally, the long-term performance record is very good, and while it's no guarantee at all for the future, it does suggest Lindsell's a safe pair of hands and a shrewd stock picker, both reassuring qualities when markets have been flip-flopping about without making much progress, frankly, for the thick end of 2 years overall. Thank you for watching, and I look forward to seeing you next time.